I'm with Remy Briand, the head of ESG at MSCI. Remy, great to see you at this time when people are talking about ESG being at a tipping point. What does that mean for you?
Well, thanks, Daniel, for the invitation. Yeah, so the tipping point for me is really when people sort of stop asking you question on why would you want to do ESG integration, for example, and they start asking you more, how to do it. And I think we are getting to that point clearly, in most of our conversation today with our clients, investors or pension fund. They're more interested in the how these days than, why would you want to do this type of integration? And that is very different than clearly 5 or 10 years ago, where most of the discussions were about, why would you even want to consider doing such a thing? And my sense is going forward, we will get a lot more, not only on the how, but really to express a little bit more clearly what you expect from ESG, in terms of outcomes, right? Targets for reduction of emission, or more specific result for engagement, for example. So really thinking through the ESG dimension, what I would call the ESG first approach, which is when you construct your portfolio, think about your investment strategy, you think about risk, you think about return, and you think about ESG during the first phase, not ESG as an afterthought on this.
We're in a short-term crisis, but there's also a lot of talk about long-termism. How do we reconcile the two?
Mm-hmm. Well, I think there will be always short-term market movement, and clearly we're in a crisis which is resulting in fairly wide market movement, and it's normal, right? So if you have new information, you have to reflect on the prospects of company, hence valuation. I think the issue has been for a long time that that was the only way of creating a portfolio or thinking about investment, and clearly when you're a trader and your horizon is a day, climate change doesn't really matter, right? But most of the money that is being managed around the world is either coming from directly individuals or for their retirement, or through pension funds also for retirement. So we're talking about very long-term horizon for retirement, and it's really this disconnect that I think the asset owners that started this movement in particular were concerned about, right? Is the disconnect between the short-term view of market and their long-term liabilities, and one way to sort of reconcile, if you want, this disconnect is indeed to bring this third dimension of ESG, which by the nature of it is a long-term approach, and it can serve as a guidance. So going back to this notion of having, ESG outcome as part of your strategy. Again, if you have a target to be net zero, in 5, 10, 20 years, then you have to deal with the market movement, but you can't just forget your long-term strategy, and that serves as a guide or as a compass, if you want, to sort of force to have a long-term view.
What is the message to clients from your perspective?
Well, I think our main message is really to be prepared. Our view at MSCI is that this move towards sustainable investing or ESG integration is probably one of the most fundamental and disruptive trend for the next decade. And with any disruptive trend, if you want, there will be people seizing the opportunity and benefiting from the trend, and there will be people caught off guard and being disrupted, and that is true in a sense on the companies we analyze or the companies people invest in, but it is also true for anyone whose business is to invest. And so this preparedness is a key element, and that will take, if you want, various forms. It can take the form of, to start with, having a firm-wide strategy on ESG, which is not the case for every single institution. It's also preparing for the need and even possibly the regulation forcing you to express your climate strategy. In particular, we think that TCFD will have a profound effect on how people would need to think about climate. So prepare climate strategy would be another element. I think engagement or essentially the strategy around the ownership is also something which is disruptive, because if you look at the very traditional way of building a portfolio, you buy and sell, and if you're not happy again with the company, you sell. But engagement, is about having a long-term influence on company, which is something which I'm not sure every single investment house is fully prepared, for that. And it can be actually an alpha component, and not just something you need to do because you sign your NPRI, for example. So I think there will be a number of relatively structuring changes, if you want, that will happen linked to that.
What's the future of the industry? You're thinking specifically about the ESG data space after this crisis.
Well, I think the crisis will change, to some extent the way we behave, working from home, and so there will be some societal changes. But the long-term, underpinning trends that have been pushing for more integration will be still there. Climate, the use of resources, and the lower tolerance generally for bad actors, due to the transparency from social media and other, sorts. So some of the underlying drivers will be there. So we'll think again that the main component is about an acceleration, and with the ESG industry getting more and more sophisticated and essentially maturing in terms of the approaches, I think we'll get to a stage where again we'll move from something which is sometime a second level thought, right? You first think about risk and return, and then you think about ESG. Really to me the future is about really ingraining ESG at the beginning, and so going back to the example of climate, that will mean targets, that will mean being able, for example, to measure your alignment, with a 2 degree or 1.5 degree pathway, which is not that simple. It's about, climate change measuring physical risk. It's about covering still every single investment you can invest in. And so there's still quite a lot of things to be done in private, asset classes. So there's still some work, if you want, to be done, but we're at a stage where you can actually build a portfolio which has ESG everywhere already today, and that is really where I see the future is flipping or tipping the logic of ESG to be in the core portfolio construction aspect.
Remy, thank you so much for your time today. Thank you.
Thanks a lot. Yeah.